Hello everyone and welcome back to the Web3 Daily. Let's dive into the latest market dynamics. After the massive liquidation event triggered by macroeconomic shocks in the previous trading session, the entire market has entered a very fragile and sensitive consolidation phase over the past 24 hours. You can feel the cautious sentiment in the air. Both Bitcoin and Ethereum are hovering around key support levels with minimal movement, as neither bulls nor bears are willing to make a significant move. The day before, geopolitical tensions, especially the tariff threats from the US, triggered a brutal deleveraging event. The market is now like a patient recovering from a major illness, trying to find a new equilibrium. Although we've seen a rebound in trading volume, it's mostly due to position adjustments after liquidations and some short-term speculation, not a sign of strong buying power re-entering the market. One notable signal is the slight increase in Bitcoin's dominance. This indicates that during times of uncertainty, capital honestly flows out of various altcoins and back into the relative safe haven of Bitcoin. This is a classic risk-off signal that everyone should keep an eye on. That little fox icon in your browser, MetaMask, the one we all know and use. Well, the big move it just made is a lot more than a simple wallet update. When I saw this news drop, my first thought was, MetaMask is flipping the whole table. It's done being just a toll booth or a gateway to Web3. Is stepping into the ring to build a decentralized financial empire right inside the wallet. They've natively integrated the decentralized derivatives exchange Hyperliquid to offer perpetuals trading, and they're also planning to bring in the prediction market, poly market. What does that mean? It means they're taking the most profitable business lines from CEXs like Binance and Bybit and putting them right on their home turf. Think about it. For the longest time, MetaMask was just the middleman. We used it to connect to other dApps, and most of the value flowed right past them. Now, they wised up. They want to keep that traffic and value in-house. And let's be real, the perps market is the prize. It accounts for something like 75% of all crypto trading volume. Who wouldn't want a piece of that? Plus, they're tackling the biggest pain point for DeFi user experience. They're rolling out features like one-click deposits and eliminating swap fees on perp trades, all to make it feel as smooth as a CEX, maybe even better. But the killer move, the core of this whole strategy, is the upcoming Mask token and their new rewards program. Anyone who's been around knows this playbook. It's the points meta on steroids. You do stuff in the wallet, swap, trade, refer friends, and you earn points. Those points are directly tied to your future Mask token airdrop. Plus, you get fee discounts. They're basically giving you a golden shovel for the future to incentivize you to start digging right now. So users grind for points and the token airdrop, which drives up trading volume. Higher volume means more platform revenue, which in turn boosts the future value of the Mask token. A more valuable token makes the rewards even more attractive, bringing in more users. You see it? It's a perfect, self-reinforcing growth loop. Honestly, they had to do this. You've got Coinbase and OKX pushing their own Web3 wallets, and newcomers like Phantom are offering a slick experience. Everyone is fighting for that user entry point. If MetaMask didn't build a real moat, they'd just get chipped away over time. So this transformation is way more than just adding a few features. This is MetaMask positioning itself for the next bull cycle. They're making sure they're not just the front door to Web3, but the core financial platform where everyone wants to stay and play. Now for our first major news story of the day, Deutsche Bank. And you know, we're not talking about some small-time firm here. This is a top-tier global bank. They put out a report, and what did it say? It said that before the year 2030, Bitcoin could be sitting right alongside gold as a reserve asset held by central banks all over the world. You heard that right. Central banks buying Bitcoin. Their reasoning is pretty direct. The whole world is in this de-dollarization wave, and the US dollar's share of global central bank reserves keeps dropping from 60% down to just over 40% now. So what do they do with that extra cash? Everyone is looking for a hedge against their fiat currency getting devalued, which is a debasement trade everyone's been talking about. So what's the hedge? Gold is one. And the Bitcoin, which they're calling the digital gold of the 21st century, naturally becomes another major option. But here's my take. The real story isn't whether their prediction is accurate. The big deal is that this idea of central banks buying Bitcoin, which used to be just crazy talk within our crypto circles, is now being seriously written about in a research report by an institution of Deutsche Bank's caliber. It's like it opens a door for all the other traditional finance giants, like pension funds and sovereign wealth funds that have been on the sidelines. Before, they might have been too scared to touch it, worried about what people would say. Now that Deutsche Bank has put it out there, they can at least start looking into it, right? So this report itself is a catalyst. It normalizes the idea, and that's the most critical signal here. This next story is an interesting one, all about regulation, and it directly impacts our wallets and our privacy. Over in India, the tax authorities are making a move, targeting more than 400 high net worth users on Binance, suspecting them of tax evasion over the past few years. The backdrop here is India's insanely high crypto tax rate. We're talking a 30% tax on profits, a 1% tax withheld at the source for every transaction. And when you add it all up, the effective rate for high earners can hit 42.7%. I mean, who can stomach that? So it's no surprise that people are looking for ways to avoid it. But here's a kicker. The only reason this investigation is even possible is because Binance itself cooperated. You might remember, Binance was previously banned in India. To get back into the market, they paid fines and registered with India's Financial Intelligence Unit, finally getting the green light to operate. The result? That registration essentially opened the floodgates for sharing user data with the government. This is a classic compliance catch-22. For market access, Binance ultimately had to trade away its user data. This is a massive wake-up call for all of us who use centralized exchanges. It's a clear signal that if you're trading on a platform that is registered with and regulated by a local government, your transaction data can be handed over at any time. After this, I fully expect to see a wave of smart money and users accelerating their move to decentralized exchanges, peer-to-peer platforms, and various privacy-enhancing technologies. The future of the market might just split into two lanes. On one side, a compliant market that's increasingly transparent and heavily monitored, and on the other, a gray zone where people go to protect their assets and privacy. Now for some big news from the RWA sector. Securitize, the top dog in the asset tokenization space, is gearing up to go public. They're doing a SPAC deal with Cantor Fitzgerald, and the valuation could top $1 billion. You might not be super familiar with Securitize, but you definitely know their biggest client, BlackRock. That tokenized the US Treasury Fund from BlackRock, BUIDL. Securitize is the tech powerhouse behind it. Being linked with BlackRock tells you everything you need to know about Securitize standing in the industry. The way I see it, this is much more than just another company going public to raise cash. It's more like a bellwether for the entire RWA sector. Think about it. The company that's selling shovels in the RWA gold rush is about to IPO. What did that tell you? It tells me that RWA has evolved from an insider concept into a legitimate industry with a real business model that traditional capital markets can get behind. A successful IPO for Securitize will set a public market valuation benchmark for the whole sector, giving other projects and VCs a clear reference point. More importantly, this will draw the eyes of more traditional capital, showing them that the infrastructure connecting traditional assets to the blockchain is a serious investment opportunity. This could unleash a new wave of funding into the RWA space and dramatically accelerate the entire sector's maturation. Let's shift gears to Ethereum, because the foundation just made a pretty big move. They've put together a new team called the Privacy Cluster. And don't let the name fool you. This isn't some small working group. We're talking 47 of the industry's top minds. Researchers, engineers, cryptographers, you name it. Their one and only mission is to build privacy features directly into Ethereum's Space Protocol layer. The tech they're working on is the heavy-duty stuff. Zero-knowledge proofs, confidential transfers, preventing nodes from leaking our data, stealth addresses, all of it. But what does this really mean? The way I see it, this is Ethereum laying the final and most critical cornerstone in its quest to become the world's global settlement layer. Think about it. One of Ethereum's biggest hurdles right now is that it's too transparent. Every transaction, every wallet balance is all out there for anyone to see. For retail folks like us, that might not be a big deal. But for the big institutions and corporations looking to come on chain, it's a deal breaker. What financial giant is going to live stream its trade secrets and capital flows to the entire world 24/7? It's just not going to happen. So, when you connect the dots with the other things we've talked about today, whether it's BlackRock tokenizing assets through Securitize, or Amina Bank offering staking to pension funds, all of these multi-billion-dollar activities demand confidentiality. The Ethereum Foundation creating this privacy cluster is a direct response to that market demand. It signals that privacy is no longer a nice-to-have feature or an afterthought. It's now a core, non-negotiable component of Ethereum's future narrative. They're clearing the path for trillions of dollars in financial assets to move on-chain, making sure Ethereum secures its top spot in this high-stakes financial race. Next up, A piece of news that I think really shows how traditional finance and our DeFi world are starting to merge. There's a Swiss crypto bank called Amina, and it's fully regulated by FINMA, their financial watchdog. So it's legit. They've just done something huge. They've become the first bank in the world to offer institutional clients staking for Polygon's native token, POL. And the returns they're offering are pretty juicy, up to 15%. Just think about it. Pension funds, family offices, corporate treasuries, all this traditional capital has wanted a piece of DeFi for a while, but they've been held back by the risks, the complex operations, and the compliance headaches. Well, now Amina Bank has basically packaged the whole thing up into a financial product. It's like a bridge, a safe and compliant bridge that delivers DeFi's yield-bearing assets right to the doorstep of these TradeFi giants. What's the real significance here? It shows us that staking is no longer just an insider's game. It's becoming a product that can be sold on the shelves of a traditional bank. This might be the real path forward for the convergence of TradFi and DeFi, not one replacing the other, but creating these regulated on-ramps that allows a massive pools of capital from the traditional world to flow safely and smoothly into our DeFi ecosystem. Finally, let's look at a piece of regulation news. But after reading this one, I have to say, Singapore just made a brilliant move. The Monetary Authority of Singapore, or MAS, was originally planning to implement a very strict new set of Basel rules for banks holding crypto assets on January 1st, 2026. Now, they've decided to push it back, delaying it until January 1st, 2027, or even later. Why? Because the major players in the industry, including banks and crypto firms, gave them feedback. They said the rules were way too harsh, especially for assets built on permissionless blockchains, which faced insane capital requirements, up to 1,250%. If they went ahead with that, local Singaporean banks would be at a huge competitive disadvantage globally, and it would stifle innovation. And you know what? MAS actually listened in the global race between financial hubs like Hong Kong and the UAE to capture the digital finance pie. Regulatory policy itself is the most important weapon. Singapore chose not to be the first to implement the strictest rules, but instead decided to pause, listen, and adapt. This action itself is a powerful signal. It's telling the entire global crypto industry, we are open for business, we value your input, and we won't let our own financial institutions lose at the starting line. This is an incredibly smart, strategic move. It further solidifies Singapore's reputation as an innovation-friendly and flexible jurisdiction. On the long road to global regulatory alignment, it's this kind of pragmatic approach that will ensure it remains one of the most stable and attractive destinations for the digital asset business. Alright, that's all for today's Web3 Daily Report. If you found this helpful, be sure to hit that like button to show your support. Every day, we're digging through the Web3 world to bring you the most critical information that's closest to the money. And we hope that by breaking down these key stories, we can help you make more rational and informed decisions on your Web3 investment journey. Also, I've dropped exclusive registration links for all the major exchanges in the comment section below. These are high rebate deals we've secured just for our subscribers, and we hope they can help you save some costs along the way. Let's all stay rational, move steadily, and get rich slowly together in the world of Web3. May everyone's crypto portfolio see steady growth. We'll see you tomorrow.